Good afternoon, everybody. It's Friday and finally a little bit chilly. Seems like we finally have the fall getting here into New York City. Interesting day today. I just want to touch on a couple of things coming into today. One of the most significant things that Evan and I discussed this week with the private group that we did in our training lab was having a trade expectation heading into the day, which will help you with your trade management. I think a lot of people get it backwards, where they put a trade on and then figure out how they're going to manage it or try and maximize the profits after they put it on. And I think they have the sequence backwards, where it has to be the other way around. And it specifically comes into today's action, where today was an option expiration day. So there's two things I want to touch on with the option expiration. Number one is, generally speaking, it's a little bit of a trickier day to trade, and the expectation is a little bit lower because you get this back and forth filling all day where there just isn't the same follow through that you would get on a normal day, because there's a lot of positions being, they're unwinding positions heading into this day, and it's just not the same clean move. And the second part of trade expectation there is what's going on from an overall perspective. And I want to get into that a little bit with the charts. The last time that I was here, we were actually heading a little bit further down. It was towards the end of the last quarter, and we talked about, we had a rally on that day, but some people calling it window dressing. It really wasn't window dressing. We have a very different picture now. And the part that's interesting me the most on this particular moment now, this Friday afternoon, is the fact that I am seeing quite a few breakouts in individual stocks in non-related sectors. And when you start to see these types of moves prior to the index moving out, you will more often than not see the index catch up where a lot of hedging was being done, and the hedging gets done because now it becomes more obvious that we pick a direction. So in my opinion, what I believe I'm going to be leaning towards in my trading moving forward now, let's say in that universe that I'm in, let's say the next week or so, it feels to me, based on the breakouts that we're going to cover right now, that we're about to take out the upside. Now, the market had a push down to 110. We were at the bottom of that range that we were in for a couple of weeks. The VIX actually got down to that 30 level. What ended up happening was we had a huge reversal to the upside off of 109, 110 in the spiders. Pushed up. This 122, 122.50 was a level that we got to about 4 or 5 days ago. So what's going on now is we have this violent momentum move off the lows. We're consolidating for about 5 to 7 days at the highs, right around the 200 period moving average on the daily. So we're not really selling off. That's the first thing that I'm looking at. We pushed up, should have had some sort of pullback to look for another move to the upside, but now we're getting this big push up and we're consolidating at or near the highs. It's a very, very riskier trade to be short selling up here without any kind of pullback. You know, picture that even if it's on an intraday basis, you put a short sale on, thing bounce, you put the short on, and it just kind of keeps drifting sideways. The longer it keeps drifting sideways, the more you don't want to be short anymore. So whether it's Europe, you know, whatever the reason you're putting on a trade or not holding a trade over the weekend, look at it from a pure price action perspective. We have not sold off at all in the last 7 days after a really solid, good volume push to the upside. So I'm going to do what a lot of people don't do. They're going to put myself out there and be like, I'm looking long next week. I'm going into the weekend flat. I don't have any positions on, but it's just normally how I trade. But then I'll take my longer term ideas and trade those aggressively in that direction. So if I go to the chart a little bit, first we're going to see the spiders here, and you can see what I'm talking about. We basically bounced up to this 122, 121.50 area, and now we seem to be holding above that level without any sort of pullback. So what I want to do now is I want to go through some individual stocks that I'm seeing that are showing some good relative strength prior to the market itself. All right, COP, very, very nice push. CVX. Okay, see all these breakouts that are occurring here? BBY is actually on the cusp of a breakout level, and we're going to look at quite a few retail stocks. This $26 level in BBY, a stock that I haven't looked at in a while that came up on a screen today. General Motors, big head and shoulders bottom there. Home Depot, breaking out. LOW, breaking out. TJ Maxx, same thing. A couple more on the list here. Kohl's, KSS. All right, Kohl's is actually a really clean setup. It broke through the 200, pushed through the resistance at 15, pulled back to right. Excuse me, that's not. This is Kohl's. Kohl's actually popped out, basically the same chart where it broke through, came back, pulled back to resistance. Next, in a completely non-related, Amgen. Amgen, beautiful breakout here. Prudential, breakout here. USB, breakout here. All right, you're starting to get the picture here? STT over the last couple of days. All right, so the bottom line of what a professional is looking for when they're setting up their ideas. If you're trading on a shorter term basis, okay, you still want to get your ideas from what the majority of the big picture is doing, which in this case is the daily charts. So even if you're not swing trading and you're trading on that intraday basis, like a lot of us are doing here, whether it's intraday or that 1 to 3 day window, the bigger money lays in the daily charts, and I'm seeing a lot of daily charts breaking out right now in non-related sectors. Whether or not we follow through, it doesn't really matter from a trade perspective. I'm going to be trading long, expecting the market to catch up with the rest of these stocks that are breaking out right now. If they do, I'll be aggressive. If they don't, I'm going to put the same trades on, and if they pull in, I'll be fine with that and take a loss on the trade or a flat or whatever it happens to be, but be completely comfortable with the fact that I had a really good idea of what I expected to happen, traded what I expected to happen. If I get follow through, great. If I don't, just the cost of doing the business. And I want to finish with this on two things. Number one is when you game plan in the morning and you come in and you set up these scenarios like we're talking about right now, and let's just say for argument's sake you come into the day with a dozen to 15 stocks. When I first started trading, I'd have the same list, and at the end of the day, I'd focus on, well, I had 15 stocks, and 12 of them didn't do what I thought they were going to do. You know what? What I should have been focusing on was I had 15 stocks, and 3 of them did exactly what I thought they should have done, and I should have cleaned up in those stocks. So make that your focus when you're making your game plan. You don't need all of them to unfold. You only need the ones that do what they should do. So if you have a big list and you cull it down, and then the market opens, and those 3 to 5 do exactly what you expected, make what you're supposed to on your plan. You spend that 90 minutes or hour or 45 minutes, however much time it is, to create your plan. Put together a big picture scenario like I just went through in whatever time frame that you watch. Come into each day planning to execute your ideas, and then just simply let it unfold. You're either going to have follow through and you make money because you planned for it, or you're going to not have follow through and maybe lose a reasonable amount on the ideas that don't follow through, but be confident and comfortable with the fact that you were ready for it. All right? And the last thing that I think is very important is a lot of us here at T3 watch the VIX during the day. If a VIX is rising, okay, there should be selling coming into the market or fear if the VIX is going down, fear is lessening. On option expiration day, get off the VIX and go to the trend because the VIX is obviously tied to the option expiration and it doesn't trade the same way. So if you normally use the VIX, which I do constantly, all day, every day, I get away from it from the option X day and even the day before because it's not as relevant because of the options unwinding. So on an option X day, switch over to the trend. All right, have a great weekend, and let's see if we get some follow through on Monday.